Big buy-in for gold coming into play then. Okay, on the news of a US and Iran peace deal, people thinking gold should be dumping on that, but no, it doesn't. Remember, gold has been under pressure because of the fears of inflation, because of fears of higher for longer rates, but the probabilities have come down for a rate hike in December, in October, and they've just come down largely, right? Which obviously, if rate hike probabilities come down, that's bullish for gold. Gold doesn't like it with the idea of rate hikes. Gold likes it when we've talked about potentially rate cuts, when we're talking about quantitative easing. Structure is bullish right now. We've had this incredible gap to the upside. We're up, what, just 2.5%. The trend is your friend right now. Personally, I wouldn't be looking to want to just jump in at where we're at right now because we're already up quite a lot and we're at premium territory. We're in the process now of printing a higher high. Just keep in mind that we're going to break out. It looks like we're very likely to break out. We've got to conquer this area here at potentially we'll print a high here at 30, 43, 60, 50. And then so long as the structure remains intact, we're going to be printing high highs and high lows. And as long as nothing turns south. Now, the very key area, the very, very key area of liquidity that we're going to be drawn into is this range. You know how we're capped in this range before? So we're going to come and retest this. This is very important to note. Whether we have the legs to do that ahead of FOMC is possible. Okay, we still got today and Tuesday and a bit ahead of Wednesday, but there could be some cautious trading on actual Wednesday first thing. But so long as nothing turns left now, this can carry on and be drawn into this liquidity around 44.50. If we don't make it, then there's not going to be the legs for that to break through and push to the upside. Okay, if we don't make it, I'm talking about ahead of the FOMC. Okay, we could just sort of falter, and then if the FOMC comes out and the FOMC is hawkish, right, as I said to you in the dollar scenario, i.e., they keep the idea of rate hikes on the table, then obviously all these probabilities for September, October, December are going to rise. The probability of hikes going to rise, but they have to be like, look, inflation, we're still far away from our target. The economy can withstand more rate hikes, and we get this pricing shifted again, because right now market's just positioning for one hike, but you want the possibility of two hikes on the table from Warsh, and then that would see gold coming under pressure. Okay, so maybe we were able to squeeze up to here ahead of the FOMC, and then we face big trouble, big retest, and then be drawn into the next major area of liquidity. We'd be coming down to 40, 50, and then 4K. That would be the play if FOMC are hawkish. If they're dovish, gold can pull back into this range. We can deal with all the chop for a little while in here, and then eventually it can break out to the upside. Okay, that's the play. There are some more specifics around that, which we're going to be positioned for. If you want ideas, analysis, the event coverage, trades, freaking education, this is extremely limited. And this is not one of those scare tactics, but I mean it. This offer that we have with our sponsor, this offer, because it's so good, it's got to be gone. It's only so long I could hold this for. So this is going to be gone very, very soon. So if you want to capitalize on it, you can. Link in the description. Other than that, have an amazing one. I'll catch you on the next one. Let's get it.